All right. This is the second part of Training 101. And I hope to keep bringing you these videos to help reinforce the trading setups and tactics that I use during our live stream. If you like what we're doing, take a moment to subscribe and hit the bell so you know when I drop these videos. A like goes a long way, and comments also help YouTube favor me. And in the description, there's a PayPal link if you want to make a one-time contribution or support the channel and help me build this free folk nation of off-grid traders and earners. So today we're going to talk about support and resistance and when to trade it. And just like in the previous video, we're going to locate pivot points. And we're going to focus on the highest part of each bar. And the pivot point, as we discussed last time, was where the market rejected was rejected and the market turned around. You want the highest and lowest, so you ignore the bodies and you just go for the wicks. So when you're trading, you really don't want to buy a break of a pivot high and a break of a pivot low. That usually causes a lot of false breakouts, and it's a good way to start losing your money. You want to find a support or resistance that has been tested at least 2 times. So the market moved up to it one time, was rejected, came up again, and rejected. That'll limit the number of false breakouts, and it'll increase your probabilities of success pretty much. So the more a support or resistance is tested, the more likely that the breakout is going to be substantial. So if you see it popped off of there 3 or 4 times, you know that once it makes that move, it's going to be quite a substantial move. A lot of people will be looking at that support and resistance. So let's see if we can find a good example of well, here is an excellent example, and I'm looking at the ES, but this works on any chart. This is kind of choppy. Let's see if we could find an example I like better. And I think that that's what most of this video is going to be, me searching out. Well, here's an excellent support right here. And I'm going to put some crosshairs here. And you can see the market came down and touched it twice and actually rejected it and ran up. So let's see if we can find a support or resistance with a break, which is really right there. So you can see actually the market tested it right here. It broke right before. It's no big deal. It tested it right here, came down, traded over here, and it's actually creating this channel. And it tested it once again over here. That's 2 good tests. And then came down and created the lower part of the support. And ideally, you want to see it, hit perfectly. But a few ticks here, a few ticks there is fine. You want to stay within the spirit of the support, but don't miss the forest for the trees because you're looking for the perfect support. Although obviously they do exist. So here is the 3rd tap of the support. A little retreat, and then pow, it breaks right out. Here's the last kiss that we commonly talk about. So once you see a break of a trend, you usually see that last kiss. If you're not wholeheartedly bent on taking that first move, you could always increase your probabilities of success by holding out for that last kiss. it's going to reduce the amount of entries you have too, because not all of the breakouts make the last kiss. But when you get that last kiss, you usually get a nice strong run up. So that's the short of the long. We're looking at support and resistance right there. You don't want to take a break of a high. That would mean this being a high, ignoring the fact that it's part of the support and resistance, and then you just take that break of a pivot high. That creates a lot of false breakouts. So that's really the short of the long of that. So also another type of support and resistance would be, and we could actually use this area here as demonstration, would be a trend line. And a trend line is basically support and resistance, but at an angle. And you go from a pivot high to another pivot high. And we call it a pivot high because it's come here, rejected, and changed direction. And you could see the same in this one. It's hit this high and then changed direction. And you put your trend line in, and then you could play a break of a trend line. And the same holds true for lower trend lines. Let's see. I would say that's more a horizontal support line right there. There's another good horizontal support, but it rejected and went the other way. Here's an example of a reverse micro trend. But it didn't break. So here's a downward move. It makes this reverse trend and then continues up. But a reverse micro trend can be a continuation pattern, and had it broken this this trend line, it would have moved down. It would have continued to move down. Another trend line. Oops. Well, actually, you know what? Here's a good trend line right there. So it breaks that trend line. You could take the break of the trend line and trade it. And obviously, you're not going to take every trend line, but when you see an aggressive move and you're looking for a good entry in it, that's a good way to find an entry to be able to take part in an aggressive move. This is you can consider this a reverse micro trend. So here's the move up. Trades down, makes a lower high, which is contrary to this move up, and then makes this high, then it makes a lower high, and the lows are not increasing to the downside. So then a break of that trend line is the continuation of this move up. So basically, we're making a move up, a little consolidation, but we build that reverse trend line in the consolidation, and it's getting ready for the next move. Bang. And that's a good way to get involved with a trend. When you see a trend happening and you want to find an entry point, you could look for bear flags, or rather bull flags on the way up, and these reverse micro trends. Always keeping in mind what your momentum is doing. And you could see here the momentum is remaining flat and then turned around and started making higher lows. And that's the indication that it's getting ready to make that move up. So while you're monitoring your reverse trend line, you're also keeping an eye on your momentum to have it confirm. And you'll find trend lines more often than you'll find support and resistance. So if you're looking for more frequent trades, if you're working trend lines, you're going to find more opportunity. If you just hold tight to the support and resistance, you're going to have less opportunity, a little more probability. So the best trend lines are the micro trends. I find that they're more consistent. And a good indication of a continued move up. Very reliable if you're disciplined and waiting for the break. The next best trend line is the pennant. And you could argue that this is a pennant. And I'm sure we'll find better ones as we look. But so it runs up, comes down, makes a another high, but lower than that, and then trades off inside, and then we line these lows up. Let's jump over to a 1 minute and see if we could distinguish them better. That a pennant would be the second best. The best trend line to trade are the reverse micro trends. Well, here's a pennant right here. You don't want to let them get too long in the tooth. A little difficulty with that. All right. So you get the move up, make a higher high, and then start a consolidation, and then another high. And then after the pole, you kind of catch that low. And that's a fairly decent pennant. And then you can see the breakout and the move. You want to really see them break out around here. Very shallow. You don't want to start trading a pennant when it gets down in here. It's just losing its momentum, as we discussed in during the live stream during the trading day. As you consolidate, the momentum fades out. You watch your MACD, and you'll see that the momentum starts to fade, and it just loses the energy. And that's not what you want. You want a lot of energy in your trade. It just puts the probabilities in your favor. Here's a move up. This is a little aggressive for a reverse micro trend, but there's the trend down and the break it to the upside. Bang. This is still a very good reverse micro trend to look at even on the 1 minute. And again, these are my favorite. I mean, and they're when it's really volatile, you'll see this move up. The reverse micro trend will be really small, and then it'll take off. When there's good momentum and really volatile. When the market's kind of sleepy, then you get these long drawn out reverse micro trends, and then it takes off. But they're really powerful to play when you can see them. And if you're looking for them, your eye gets sharper. Here's an aggressive down move. Here's a reverse micro trend to the upside. This is a nice short one. And then you take that break to the downside. Again, it's a continuation pattern, so you're looking for a move to find it. And then away it goes. Here's another break of a support. There's a good support right there. Did a little false break. So you want to wait for like 2 or 3 ticks if you want to minimize the amount of false breakouts. And that's what that's called here. That's the biggest problem. So, I mean, if we took that trade based on our theories during the trading day, we would enter probably right around 41, 47. Well, you know what, 25. You could wait for 2 ticks. So you would enter around 41, 47. So this one wouldn't have executed, but right here it would have executed. But had you taken this, you would have had your stop right up there. So you would have risked a buck. It would have traded back and then made a move to that stop again, to that support again, and you would have taken that support. And that run would have picked you up $3 a contract, or $1.50 a contract, being that you get half a buck a contract. Here's the last kiss, and away it goes again. So that's pretty much it. Here's another support that got rejected, and you could put that support in, this low support. Let's get rid of these so it's clear. You could put that support in and watch it trade, and then when it breaks that support, you know you're making a move down. But this is the market right here. So you got to work with these, and you reduce your risk by taking it and putting your stop above the high bar, because it should just run. That's what you're looking for. But markets do this. You don't want to ride this out because you don't know if it's going to continue and turn around. Just take your loss. Let it do what it has to do. You could take an entry again once it breaks. With this high right here, you could be aggressive with your stop. You could take your entry here, put your stop here. I mean, theoretically, you wouldn't have a change. This is only actually a down. You could put your stop here, give yourself some room. So if you entered here, you would have taken that much heat. But I don't bother. I'm only a commission fee or a ticket charge away from taking another entry. I'll take my little loss here and make my money on the down move. And for me, that's the cost of doing business. I'd rather do that than sweat it and hope that this thing turns around, because sometimes it doesn't. The large stops are hard to make up. It's easier to make back the 75 cents than it is to make back, the $1.25. It's just more work. Here's a very tight support right here. It came down, it hit here and got rejected, and then turned around and tanked right through. You'd have to be watching pretty close and be pretty sharp with your lines to catch that one. But that's obviously a really good support. So that's it. When making your supports and resistance, you go right to the pivots. And over here you could see one of my favorites, which is the reverse micro trend right here. It came down, made a low, made a high, but it's a lower high. Here's the higher. It's a lower high. Made a higher low, and then made a lower high. And that's a really good one. That's what you want to see. You want to see either flat or lower highs and higher lows. So the direction you want, you want it to start consolidating and condensing in there. So that's a really nice one, and you could take that break, and you've made money on the move. These are double tops. That's a video for another time. So reverse micro trend. And again, to reiterate, the more you see the test, the better off you are. So that's support and resistance, and that is trend lines. And in the little next clip, I'm going to talk about some patterns, different patterns that you could use, like trend reversal breakouts, micro trend breakouts, pennant breakouts, get into the wedge patterns, the head and shoulder patterns, and a cup and handle pattern, and kind of discuss what criteria you want to see for it to happen and for you to execute a trade. So if you like my content and I'm clear and you enjoyed this, please hit the subscribe and hit the like and hit the bell so you know when I drop these. And there's a PayPal account if you want to make a one-time support of our channel. That would be greatly appreciated, and we'll keep bringing you this sort of content.